I would just like to say that I think unlike the debt problems of the 1980s and the so-called debt crisis in Latin America, where the basic problem was the sovereign and the borrowings were to the sovereign, in the countries in Asia, what we see are the borrowings and the debt problems have been pretty much concentrated in the financial sector and the private sector. So that is an obvious difference when people look at past history and particularly at the Latin American debt crisis. Having said that, I think that we should focus our discussion on the causes, but more on the remedies and lessons learned. What I'd like to do now is to introduce our panel. As I said, it is very distinguished. I've asked each of them to speak for approximately 5 minutes. We'll have some interchange among the panelists, and then we will be taking questions from the audience. Ronnie Chan is chairman of the Hang Lung Development Company in Hong Kong with holdings in property development and hotel operations. He is a board member and trustee of a number of public companies and private companies, as well as charitable organizations, educational institutions, and think tanks in Hong Kong and around the world. Among other things, he serves as chairman of the Hong Kong-U.S. Economic Cooperation Committee. Kenneth Curtis is first vice president of Deutsche Bank Asia Pacific, where he serves as strategist and chief economist. He is the author of an influential book on Japan, as well as many articles in a long list of international publications. Professor Curtis is also affiliated with several universities and research and think tanks. John Fahey is Australia's Minister of Finance and Administration and a Member of Parliament representing the electorate of MacArthur. He's trained in law and began his political career in 1984 in Parliament in New South Wales and has served as Minister for Industrial Relations and Employment. Mr. Fahey chaired the Sydney bid for the Olympic Games, and upon the success of that bid, he has served as Minister for Olympic Games implementation. Dr. Supachai is Thailand's Deputy Prime Minister and Minister of Commerce. He holds numerous degrees in economics and development planning. He has also served as President of the Thai Military Bank, Chairman of Nava Finance and Securities, and Chairman of the Commercial Union of Thailand, and also as a Member of Parliament, is an active member in his political party, which he helps lead. Stanley Roth is U.S. Assistant Secretary of State for East Asia and Pacific Affairs. He has been involved with U.S. policy in Asia since 1979 in a series of congressional staff positions, as well as most recently in the Clinton administration in both the Defense and State Departments. Asuki Sakiabara, I think, is well known to everyone as Mr. Yen, among other things, is Vice Minister of Finance for International Affairs, received his economic training at the University of Tokyo and University of Michigan. I could go on at some length about Dr. Sakiabara, but I will leave it at that. Dr. Yu is Chief Economic Policy Advisor to the President-elect of the Republic of Korea, Dr. Kim, and I have recently had the pleasure of working with him in the renegotiation of Korea's bank debt, which I am pleased to say, in case you have not noticed, we were able to reach agreement on the commercial banks and the government in Korea on Wednesday evening. He is educated at the State University of New York in Binghamton. He has served on a number of various distinguished organizations, and among other things is the Chief Economic Advisor of the President-elect, Dr. Kim of Korea. He has also served in the Office of Economic Policy for the state of New Jersey and was a professor at Rutgers University. I think, having gone through that distinguished group, what I am now going to do is to ask each one of them to take 5 minutes and talk on the subject they want to, with some help from myself as to what they will do. For Ronnie Chan, which I'd like to open up with, Ronnie, I'd like you to talk a little bit about how you see Hong Kong, how it's been affected by the Asian economic crisis, and you might describe how you see the peg holding up in Hong Kong going forward. Ronnie?
Thank you. I'm the only businessman on this panel, so we have all these distinguished individuals, so we'll go up from here. Also, as a businessman, we are simple-minded. We don't have all the nuances and all the politics. In business, you have to distill everything down to a binary fashion. Buy, not buy. Sell, not sell. Go, no go. So I look at the world in a very simplistic fashion. Served me well so far. So I'll let my colleagues do all the nuances. If you were to look at the East Asia problem, and I'll get to Hong Kong, really, there's only, you may say, distill everything into two problems. Number one, how well is the financial and economic system? And number two, how well they manage that system. And as far as I'm concerned, in East Asia, there's only two economies that have passing grades on both accounts. That is Hong Kong and Singapore. There are some economies that have plus or minus on the system, on the structure, but manage themselves pretty well. There's Japan, there's Taiwan, and maybe China. Of course, China has a added benefit of not being exactly an open financial system to the world. The rest, well, anyway, I will stop there. Hong Kong. Let me say this first. Hong Kong's fundamentals, economic fundamentals, are rather healthy. If you were to take the two dimensions that I mentioned and measure Hong Kong, and indeed all the East Asian economies, then it would suggest that Hong Kong and Singapore should recover first. In the case of Singapore, they service all the neighbors who are, economically in trouble. And so they may take some time. Hong Kong, on the other hand, is really much healthier in many ways, except that we have one Achilles heel. That is the Hong Kong US dollar peg. That is something that we have been having that peg since 1984. So that's not a new problem. Fundamentally, economically, we're doing fine. Then you may say, well, how about the real estate market, which is a business that I know a little bit about? Well, the real estate market actually dropped by something like 35% in the last 7-8 months. But on the other hand, every 3 years we drop by 35-40%. So to you all, that's hell. To us, it's like eating salad. So real estate is really not the cause of the problem at all. Rather, I would say that because of the fundamental change in policy that the new government under Mr. C.H. Tung, real estate prices have to adjust. You can call it an asset deflation. I would like to think that it is really in response to a policy rather than a bursting of the bubble. So real estate is not a problem. And what is the problem? The problem is very simple. When people see that, in particular the Wall Street type, see that Southeast Asia, the economy, the currency went to hell, well, Hong Kong has this peg. It's easy picking. They don't make money in the peg, or rather attacking the peg. Rather, they recognize that we only have one defense. That is up the interest rate. We up the interest rate. Those guys have shorted our stock index by the dozens. They make more of the money all the way down. The problem is, of course, when the stock market dropped by 50%, the whole economy get into all kinds of ramifications of that drop. And that is basically fundamentally the problem with Hong Kong. A lot of people, including Nobel laureates, have suggested all kinds of things as a remedy. Well, we are studying them, we're looking at them, but I'm not sure if any of them will work as well as upping interest rate. And that's what we're suffering from, and so be it. Remember one thing, however, all the major players in Hong Kong, such as all the major real estate companies, including my own, we are all very, very lowly geared. In fact, I know my company was sitting on tons of cash, don't know what to do with it, so let the market drop, we'll be okay. Hong Kong-wise, again, the top-tier companies, no problem. You may say, what happened to the smaller company? They'll be fine. We'll just buy them up. Each one of us take one. The problem will be resolved. So that's really is my reading of the situation. I'm very happy to bet that for the next couple of years, the Hong Kong peg will stay. When will it go? Well, when the renminbi begins to be a little bit harder, maybe that will be the time that we can phase out the peg. But for the next couple of years, I think we have full determination to keep it. It's painful, but it has to be done. And I'll be very happy to close with another comment on China. That is, I'm also happy to bet that China will not devalue its renminbi, at least for the next 12 to 18 months. There are many reasons. I won't go into it. If you want to, be happy to discuss later. Thank you.
Thank you, Ronnie. I'm now going to ask Dr. Supachai to talk a little bit about the economic reform process he is helping head in Thailand, which is quite massive. I think, and a lot has been done in the short time that this government has been in power. I'd also like him to comment on one of the questions that some people say is one of the reasons for the for the Asian crisis the opening too quickly of markets or not. I will let him answer that. Dr. Supachai.
Thank you very much, Mr. Chairman. Thank you, Mr. Chairman. Let me first start by saying that the ongoing Asian crisis is a result of a convergence of several factors. There's been some theories and explanation with hindsight on some of the things that has taken place in Asia in the last couple of months. But to my mind, problems are mainly caused by both cyclical and structural factors. So in order to address this problem, it demands that the solution be also short-term solution, medium-term, and long-term solutions. As for the national agenda that I could relay to you in terms of the effort that has been put up by the present Thai government, there are several things, but I would like to highlight the following. As for the priorities on our national agenda, first things on our list would be the financial reform. The financial reform at the moment, which is going through quite comprehensively and pervasively in Thailand, would mean the liquidation of some part of our financial system to try to recapitalize the parts that could still be salvaged, that are not insolvent, and to bring in foreign investors into our financial system, for which, for the first time in Thai history, we are permitting a full 100% participation by foreign investors. So this is the time to come in and invest into Thailand's financial system. At the same time that we are tackling the financial crisis at present, we must also aim to address the problem of competitiveness or the lack of competitiveness, which has resulted in the no growth for Thai's export in 1996, 1997. We had suffered tremendously because of the emergence of other relatively more competitive economies around Thailand. So at the moment, we have to upgrade the level of technology in our industrial investments. We have to retrain the labor force. The results are beginning to show up. If you look at the trade account of Thailand towards the end of last year, then you would see that technology-based export in terms of US dollars went up by something like 10%, whereas labor-intensive export from Thailand show a definite drop of more than 10%. We need to privatize some of our state enterprises rapidly, not only to gain some revenue, but to reduce the need for the state enterprises to tap into the government expenditures, to reduce the government expenditure so that we could go back to our fiscal discipline. Now, the International Monetary Fund has asked Thailand to start off with the privatizing of Thai International and one state-owned petroleum corporation. Now, what we are suggesting, and I'm directing this full privatization of state enterprise, we are working on at least 15 state enterprises for which privatization plan should be completed before the middle of this year. Now, this will include most of our energy sectors corporations, the oil exploration that has been owned by the Petroleum Authority of Thailand, for example, the independent power producers, the IPP projects will be privatized as soon as we can. We would do the privatization of the second international airport for Bangkok that has always been in the hands of the government. At the same time, for those who will take up the management of the second international airport, we will also give the first Bangkok airport also into the bargain so that they could manage both airports at the same time. We are looking at the earliest opportunity to revamp the whole of our Foreign Investment Act. As you know, Foreign Investment Act in Thailand dates back 25 years ago, at a time when first foreign investment came into Thailand. And it was put up in order to protect the Thai interest rather than to induce and to promote foreign investment. So at the moment, I'm trying to revamp, possibly if we can do it within the next parliamentary session, we will introduce altogether a new Foreign Investment Act so that most of the prohibitive activities would be weighted out of the investment, would be kept to the minimum. Only those that are in concern with our securities and heritage will be kept in the hands of the Thais. The rest will be put up for foreign participation. We have maintained our trade and investment liberalization process on track. Instead of closing down the economy, instead of yielding to the pressure of the industry to close down so that we could rehabilitate our own domestic economy. We have gone through with a commitment in our ASEAN free trade area. We are one of the keen promoters of the early sectoral liberalization in APEC. We have provided a very attractive offer at the latest World Trade Organization financial liberalization packages. We have also proposed to the ASEAN that we liberalize our investment area, the ASEAN investment area, as soon as we can. But let me leave with you my last comment. In spite of the fact that we are doing this very diligently at the national level, I don't think we can all come out of this Asian crisis by individual national efforts alone. It needs regional efforts, region-wide efforts. So when we talked about the Manila Framework Agreement to have regional or peer surveillance, when we talked about the possibility of encouraging regional financial reform and possibly setting up of some regional financing facilities, this is a region-wide solutions that would be in supplement of the IMF solution. At the international worldwide level, we need the support from the West. We need the G7 participation so that the ongoing speculative panic mood could be eliminated and the contagion be prevented from spreading throughout the whole of Asia. And then we will start to have some solution to come out of the crisis. Thank you.
Thank you, Dr. Supachai. I should say that when I visited Thailand in September when Dr. Supachai was in the opposition, the program that he's telling you about now is virtually the exact one he outlined to me and said to me, when we get into government, this is what we're going to do, and this is exactly what this present government is doing. Now I'd like to turn to Kenneth Curtis and ask him as a banker, economist, to maybe comment on the so-called regional solution and as against the so-called case-by-case approach, and any other thoughts as a banker that knows Asia well he would like to make. Dr. Curtis?
Thank you, Bill. I see, of course, and we're seeing it very clearly in Korea and Thailand, that these two countries are making very deep, sincere efforts to make the type of changes that will set these countries on a base for a new cycle of expansion once this crisis is over. But as the Deputy Prime Minister just said, these countries alone can't do it on their own. And looking regionally, indeed internationally, it seems to me that there are 3 or 4 issues that are of fundamental importance. Fundamental importance because decisions by other countries in the region, indeed other countries around the world, are very much part of the creation of this crisis, as will decisions by these countries could be very much part of the solution. I say decisions by countries in the region and elsewhere in the world were part of creating the crisis. I think of the devaluations of China in 1993 and 1994 and 95, which basically made China, with all the direct foreign investment it was getting and with its endless supply of cheap labor, a country that created such a formidable dynamic that if anyone else had their cost structure move out of alignment, they simply got run over by the Chinese. And of course, with the US reversing so abruptly its dollar policy in mid-1995, and with most of the countries of Asia having tied their currency to the dollar, largely on the strong advice of organizations like the IMF, as the US drove the dollar up, and the driving of the dollar up was the condition for the US getting the amounts of money that it needs to finance its own external debt at low interest rates. That, of course, then drove the cost structures of East Asian competitors completely out of whack, and the Chinese stepped in and cut off their low-end imports. And because the Japanese refused to deal with their banking crisis and their economic difficulties and adopted a weak yen strategy, the Koreans, who had bet their country on the yen being 90 to 100 against the dollar, and that Japan leaving the sectors of its growth in the 1970s and 80s so that those sectors would become open for Korean companies, all of a sudden they woke up and found Japan with the yen at 130, taking back market share in sectors like steel and shipbuilding and cars and low-end consumer products and commodity chips. And so the decisions of the great powers of the Asia-Pacific, China, Japan, and the United States, were very seminal to the creation of this crisis. So as I look over the next 6 to 9 months, I see also that these three countries have very important decisions to make that will be critical for the restoration of the health of the region. I begin with Japan, a country that basically seems determined to prove that Herbert Hoover was wrong, that you can raise taxes dramatically against the backdrop of an extremely weak real estate market following the biggest equity market crash since the 1930s, and still not have trouble. Herbert Hoover threw in the towel after 1 year. The Japanese authorities haven't capitulated yet. They've announced a minuscule reduction in taxes that works out to something like 6,000 yen per person per month for only 12 months. In other words, largely irrelevant to the dynamic that's in process. And so it's urgent for Japan to take a new policy course, to see the Asian crisis as the equivalent of a new oil shock, and reverse its Hooverite fiscal policies, release its domestic demand, start to deregulate demand, give us an agenda for demand deregulation that starts today, not in the year 2005, and open up that economy and release the tremendous power that's there. Japan's problem's not money. Think of Japan's net government debt is 4 times lower than the average of the OECD. So Japan has lots of things that it could privatize, so the question of the public debt is not central to this issue. Number 2, China. The leadership in China has announced recently and reconfirmed a number of times that they won't be devaluing again anytime soon. But we have to be realistic. This is an economy that's slowing quite quickly at the moment. Consumer prices are deflating. We're at the beginning of a major real estate reversal in the city of Shanghai. Profit margins are falling. All of the signs are there of an economy that's starting to slow down too quickly for its own good, particularly with the government having committed itself to creating 18 to 20 million new jobs to mop up the unemployment that will be created with the restructuring of the state sector. So it's important that China announce quickly that it's going to cut interest rates. It's running real interest rates at 9 to 10%, that it cut interest rates 3 to 4% quickly. And number 2, that China bring forward much of its infrastructure program to put some domestic demand into this economy, and otherwise, in that manner, preempt the pressures that will make it much more difficult later in the year or next year for the government to avoid a devaluation. And finally, the United States. But a few hours ago in his testimony to Congress, Mr. Greenspan came back and spoke about the forces of deflation that could be released in the world economy as a result of these recent developments. That discussion triggered a massive rally in the US bond market. What I think would be very positive for Asia and the world economy at this moment, that Mr. Greenspan go beyond words to acts and actually cut interest rates a little bit to give a signal to world markets that America is going to use its margin of maneuver on the monetary side to be of more of assistance. Also, we need further signals from the United States. In particular, the administration lost the battle for fast track last fall, had to pull fast track from Congress. I would like to see the US administration put fast track back on the congressional agenda, and this time make the sufficient efforts required to push that through. If Japan, if China, if the United States, the great powers of the Asia-Pacific, were to adopt these types of policies against the background of the restructuring efforts that are now underway in Korea, in Thailand, and we hope in other countries of the region, that then would allow us to contain this crisis, to create the global economic environment so that these reform policies can take root and transform what has been a massive crisis into something that we come out of very quickly, into a new phase of prosperity in Asia. If Japan particularly refuses its responsibilities, the price that Asia will pay, the price that Japan will pay, indeed the price we all pay, will be much higher than I think most of us suspect today.
Thank you very much for giving us a rundown of some of the macroeconomic problems and the possibility of contagion to the so-called developed world. I'm going to ask Asuki Sakiobara to do two things here. One, as you all know, he is a key player in resolving the Asian crisis. But second of all, I think I would like him to talk a little bit about the problems facing Japan, because as the world's second largest economy and obviously the largest in Asia, what happens in Japan will affect very much the resolution or lack thereof of the present crisis in Asia. And I'd like him specifically to comment on plans to reorganize the financial system and getting Japan back to some sort of sustained growth, which is obviously necessary to help Asia move along. Asuke?
Thank you very much, Bill. First of all, I'd really like to congratulate Bill for successfully concluding the negotiations with the Korean government in extending short-term loans to medium term. I think this would be probably looked back as a major milestone in sort of restoring the confidence in the Asian region. I think Asian economies seem to have hit its bottom. With the negotiation concluded, the Korean economy would head upward, and there has been agreement made between Thai authorities and IMF, and IMF is going to front road its disbursement. And an announcement was made by Indonesian government this Tuesday for their bank restructuring plans and their plans to deal with external debts. So I think necessary sort of solutions are beginning to emerge, and that restoration of the confidence in this region is forthcoming. There are some remaining problems, of course. One is political uncertainty, particularly in Indonesia. There's some uncertainty around the vice presidential nominee. And as Mr. Spache has told us, there are problems of bank sector restructuring, which many of the countries has taken major steps. And another issue is external debt issue. There was a resolution in the case of Korea. Indonesian negotiations will probably are starting already. Of course, there are so-called structural issues, which are very important in restoring the confidence. But those structural issues do not have any direct bearings to the crisis that we have at hand. So I think banking sector restructuring, external debt issues are the most important issues the Asian countries should tackle with. Along with that is the exchange rate issue. If banking sector external debt issues are successfully tackled, exchange rate would shoot back to where it is appropriate. But we have to have some kind of coordinated policies to make the collections for the misalignment of the exchange rate. This is an issue to be addressed in the coming month. Well, let me go back to Japan. Mr. Hashimoto is determined not to become a Japanese Hoover. I think Japanese economy has hit its bottom in the months of November and December, where we had a series of bankruptcies of major financial institutions. I think we have really seen the hell in those 2 months. And a political decision has been made between the middle and the end of December to infuse a huge amount of public money into the banking sector. Infusion of the public money into the financial sector had been a taboo for the last 2-3 years. But the major decision was made in December to do that. And now the bills are submitted to stabilize the financial sector with the infusion of the public money. Those bills would probably pass a diet by sometime in the first and second week of February, and the measures would be implemented quickly after the passage of those bills through the diet. With regard to the macroeconomic policies, as Mr. Curtis pointed out, there are some criticism or substantial criticism from those in the market that the measures we had taken in December was too small and too late. However, let me point out that these measures are contained in the supplementary budget of 1997 And those tax reductions amounting to 3 trillion yen and addition to the public investment amounting to 2 trillion yen, altogether it amounts to 1% of GDP. Those measures would be taken by the end of fiscal 97. That is, supplementary budget will probably pass the diet by the end of this month or early February, so that public money, which is equal to 1% of GDP, would be thrown into the economy within the time span of 2 months. This is a huge fiscal stimulus. Of course, the next issue is what are we going to do from April? And since it is very difficult to talk about the specifics of what we would do from April while we are debating the budget in the Diet, neither Prime Minister Hashimoto nor Party Secretary Kato avoided to be specific. But they have made a statement that they will be flexible and they will take measures if deemed necessary. So I think we are determined. Japanese policymakers are determined to restore confidence in the Japanese financial system and to have strong economic recovery. Recently, Prime Minister Hashimoto said that there are 2 major issues of priority. One is restoring confidence into the financial sector by the infusion of the public money. The other is to take appropriate measures to encourage the strong economic recovery in this region. We will take the responsibility as an anchor in the Asian region, and necessary measures would be taken. Thank you very much.
Thank you very much. Now I'd like to turn to John Fahey and ask him to give a view as he sees it from Australia, but maybe also to comment on the roles of the IMF, the World Bank, and the Asian Development Bank in this crisis, as Australia is an active member of all 3. Minister?
Well, thank you, Chairman. I'm delighted to have this opportunity to perhaps focus your attention a little further south than what the speakers so far have been addressing. And I noted that Ronnie started by saying that the solid economies of Asia were Hong Kong and Singapore. Geographically, at the bottom of Asia there is a country called Australia, and if I could take a minute to let you know just what the economic position of Australia is, because I believe it is important in the context of this debate. In the last 2 years, the government that I'm part of has gone through a program of repairing the budgetary position, bringing our budget deficit from 2.1% deficit to next year 0.4% surplus, progressing through to the turn of the century at about 2% surplus, 2% of GDP. We've also entrenched even further the independence of in the conduct of monetary policy by our central bank. We've reformed our labour market. We've continued to bring forward this reform in areas which I think are very relevant to Asia and will become even more relevant, as other speakers are already addressing in this forum today, as the next few months goes on, and that is the reform of our accounting and budgetary framework, the development of a new organisational framework for the regulation of the financial systems. The idea there is to promote efficiency and contestability in financial markets and in our payments system. We've said about tax reform, not to get greater revenue. In fact, our budgetary reform has been achieved through cutting back in spending, not in raising revenue. We believe that there is a need for ongoing market reform, labour market reform, particularly in the waterfront. So what is the current state of the Australian economy? Growth, 3.75%, at the top end of the OECD. We've got inflation down to record levels, record low levels of 1.4%. We believe that that is locked in, 1.4% in underlying terms, and we have every reason to believe that low inflation will remain in Australia for the foreseeable future. And we've seen interest rates at rates comparable to the 1970s. They have come down significantly. So all of this suggests that there is a solid economy geographically south in Asia called Australia, and it has given us the opportunity to withstand the shocks that Asia has presented, of course, to all economies in the region and elsewhere. What does it mean to us, Asia? It represents 60% of our export market. It represents 35% of our imports. It is vitally important to our future. As the Chairman said in the introduction, that Australia has been part of the rescue package, as it were, since the beginning. In fact, in all three countries of South Korea, Thailand and Indonesia, only Australia and Japan have been in all three. We were early into the problems of Thailand, and in each instance we have committed ourselves to $1 billion US as part of that package. What we believe is most important, though, and I'm going to repeat some of the things that Dr. Superchai said here, is that it's one thing to say we can provide through the international community, through the IMF, through the World Bank and the Asia Development Bank, some sort of relief in the short term, some sort of breathing space, but that's really all it is. When it comes to doing these swaps or loans, you provide time, you buy time, and it therefore means that the structural reform in each of these countries that addresses the problems that are seen to be there is far more important than the actual dollar rescue package that is at the back of all of this. We believe, of course, that like everyone else, that the first step is the reform of the banking and the financial sectors. This will mean casualties. I'm again pleased to hear that Dr. Superchai has indicated in Thailand's case that some of those that weren't up to it will in fact fail. This inevitably must occur so that there is a stronger and structurally stronger banking and financial system at the conclusion of all of this. There is a need, of course, to ensure that, as I've indicated in Australia, that despite the fact that our banking system was a very resilient and strong one, it withstood what we regarded as a recession of the early 90s, late 80s. We believe there was a need again to open that up even further to this accountability and transparency, to ensure that those barriers that had broken down between various financial institutions, those that were involved in a payment system, that there was a flexible and competitive regime in place, a regulatory regime, a prudent regulatory regime that could carry what we see as necessary for the future. Asia needs that prudential regulation. I again support regional surveillance. It isn't a case of individual countries dealing with it. It's a case of ensuring that there's regional surveillance and international support that will in fact, international cooperation that will in fact ensure that it's there. I think the policies of the individual countries have to be credible and they have to have the support of the people, and I guess suggest that, as others have, that the risk is in the political area, that the people won't in fact necessarily support. The governments have shown a great will, I think, in all three countries at this stage. Maybe it's variable, but it's certainly there in all three countries. And I believe then that if we can hasten what has been seen as necessary through APEC, the reform of trade, that in turn we will see the opportunities arising out of this better for the region and better for the world's economy. There's a need for independent flexibility, and we only last week agreed to support our exporters with the national interest account by providing some $300 million worth of insurance to back up their trade with South Korea, and I suspect on an individual basis that will continue to occur. So it's an individual effort for those that are trading. It is an international cooperation. Australia will be pleased to be part of that. It is a need to ensure that there's structural change, particularly in the financial and banking systems, a political will, and I believe that out of all this we'll see a much stronger Asia, and Australia will continue to be part of that in a trade, in a geographical sense, in a political and economic sense. Thank you.
Thank you very much. I think John Fahey mentioned very appropriately and very importantly the political will. My own experience has been, if you don't have the political will to implement the necessary reforms, no IMF program, no World Bank program, no G7 program can make you do it. And I think that that is key, I think, to Asia coming back. I learned long ago you can't separate economics, politics, and security. And I think that's a lead-in to our next speaker, Stanley Roth. And I'd like to ask you, Stanley, to talk a little bit about how you see the American role in all of this, taking into account your varied experiences, in both the political as well as the economic and the security side.
Thank you, Bill. In American parlance, I would consider that question to be a softball, and in fact an opportunity to lay out how we see some of the issues, and it's no accident that I am here instead of one of the many economic officials who are at other panels, because we want to emphasize the point that the United States government is not looking at this only as an economic issue, but in fact is looking at the big picture. I think the first point I'd like to address is this rumor that is out there that we simply don't care, that in fact that the United States is going to walk away from the region. Some variations of this rumor have it, we're doing it because we're focused on our own issues and we're going to leave it to Japan. This was quite prominent at the time the Thai agreement was announced, and the United States didn't have a direct contribution, and a lot of people said we were walking away from Asia. I think I could characterize that theory in 2 words: utter rubbish. I think there were specific reasons why we didn't participate directly in terms of contribution on Thailand, but just looking at our behavior afterwards, including putting up our resources for Indonesia and Korea, I think has made it very clear that the U.S. is engaged all the way in the Asia-Pacific region. Other people have, particularly more in Southeast Asia rather than Northeast Asia, surfaced the rumor that this is some kind of payback, that this is our way of striking back at the critics in the Asian value debate, and somehow we're enjoying this, watching Asia suffer. Again, nonsense. That we don't have the luxury, even if we contemplated something so short-sighted, because of our interests that are at stake, the security, the diplomatic, and of course the economic that I'll get to in a minute. So I think the first point is, yes, we're passionately engaged in this. We understand that vital American issues are at stake. We are not leaving the playing field to anybody else, but we're playing with all the other actors. So let me move on to the question, why do we care? And let me start not from the economic side, but from the security side. I think it is self-apparent in a continent or a region where the United States has had to send troops to fight in wars 3 times in this century, that the United States can never afford to lose track of the big picture in the Asia-Pacific region. We have security interests out there that are nothing short of vital, and that is reflected in our 5 alliances. I think the most obvious case where the economic crisis could intersect with security immediately is the Korean Peninsula, where none of us know what calculation the North Koreans are making. But in a country that has been known to make staggering miscalculations in the past, the last thing we want to see is a North Korean judgment that South Korea now is weak, vulnerable, and this might be the time after 40 years to take some military action. That is probably the most dramatic example where the United States has a major role to play in terms of deterrence, in terms of working with our South Korean ally to make sure that North Korea does not get this deadly misimpression. But there are other security issues as well. If Southeast Asia, which I don't think has gotten enough focus on this panel, is allowed to descend into chaos, if we lose the stability in places like Indonesia, which has been the centerpiece of ASEAN, who knows what the consequences will be. We have gotten so used to thinking of Southeast Asia as peaceful because of the wonderful success of ASEAN that we have forgotten how many conflicts or nascent conflicts there were only 30 short years ago. And one of the reasons these have been overcome, or at least mitigated, has been because of the prosperity in the region. If that region goes on a downward slope, I would not want to bet that none of these conflicts resurface. So we have a major interest, again, on the security side in this issue. Let me move on to a second factor which doesn't get talked about nearly enough, and I do it with some trepidation sitting next to Ronnie Chan, but I think it's in terms of American values. I think that without trying to re-trigger this entire debate, I think it goes without saying that we view in the United States the development of middle class, the rise of prosperity, greater interaction, globalization, as helping to promote some of our core American values. Not in terms of a missionary crusade, but rather by the strength of ideas. And we have seen what we think has been a crucial role of the middle class in Korea and the democracy there, in Taiwan and democracy there, Philippines and democracy there. And we believe that there's a linkage as well between democracy and peace. Although it's not an ironclad correlation, we think it's a pretty good correlation. And the notion that if we suddenly see the disappearance or shrinkage of these middle classes, I think there is not far-fetched to say that this could have major implications for democracy as well. What happens to regimes under duress if they feel that they have to take drastic actions to respond? So we have a stake here as well. Finally, on the economic side, of course we have interests. And for this crowd, I won't reel out the statistics that my staff gave me about the jobs and how much it means to the U.S. economy. But obviously, we have a major stake in terms of our own growth and our own prosperity. In addition to which, we are not ourselves immune to the contagion factor. I think we had a pointed reminder of this last October, where we had a rather dramatic drop in just one day in the stock market, partly attributable to events in Hong Kong. We delude ourselves if we think that we are immune, that we can shrug off this crisis, that it's only 0.5% of GDP. Who cares? We are very cognizant in the government that this affects our economic interests directly, and that we have an interest in helping the region to recover. Okay, if that is why we care, what are we going to do about it? I can't tell you that I came here with silver bullets. In fact, I'm hoping to go home with a few based on the conversations here. But I think that the core of the policy is rather clear. First, of course, there have to be country-specific IMF-centered programs, as Bob Rubin likes to say, that make sense and that are implemented by the governments diligently. And we're fortunate to have at this panel representatives from some of the countries that have been among the most diligent, including Korea and Thailand, and I heard no criticisms in recent days about the policies of either of those governments. I would be much more charitable than my neighbor in his opening comments. But in addition, we fully accept the argument as well that individual countries alone cannot necessarily get out of it on their own, that there has to be, I would say, not only a regional dimension, but a global dimension. This has already happened. This isn't a new thought. We've seen it with the involvement of the Europeans in the Korean debt negotiation. We've seen it in the various countries that have been involved in the other bailouts. But I think we also have to look at it not just from the resources perspective, but we have to view it from the psychological perspective. I've just come back from a 7-country tour in Asia, and I was enormously struck by the diminished confidence in the region. I would say both Northeast Asia and Southeast Asia. I travel every month. It was quite noticeable, the difference in January from December, and compared to September, let's say, it was staggering. This is a region that has lost faith in itself, and I think it's going to take some outside support to help get some of this confidence back, as long as it's matched with the implementation of the IMF programs. And that is why my government has been quite interested in what was originally a Singapore proposal to try to have a larger group, G7 plus, of relevant officials to talk about this issue. It would certainly be a confidence-building measure for Asia itself that the world is focused on their problems, that they are not alone, and perhaps some constructive ideas will come around for dealing with the specific problems as well. Finally, I think a third portion of the response, and one which the United States is just beginning to turn its attention to, is, you could call it the humanitarian or development aspects of the situation as opposed to the financial. But particularly, again, in Southeast Asia, we're dealing with a situation quite different than in the recent past. Generally when you're an Assistant Secretary of State for Asia like I am, you have nothing to do with the Agency for International Development because your countries are viewed as rich. You're viewed as the role models, the private sector, trade, investment crowd. What has foreign aid have to do with it? Clearly, that is not the case today if we're talking about Indonesia, where we're going to see tremendous hardship in the Indonesian countryside as millions of unemployed go back from the cities to their villages. And I think we have to have something of a social safety net. And we are just starting to work with the World Bank and with other countries to figure out how we're going to deal with this. But we're going to have to restructure our programs to make sure that we're addressing this. Similarly, to a lesser degree than Indonesia, but Thailand, I think, has some pressing issues as well in terms of providing for a social net. And this may yet become a factor in other countries like the Philippines as well. So I think we have to keep track of the humanitarian and development side of the situation, even as we deal with the overarching financial stability. Thanks.
Thank you, Stan. I think the comment about the need to not forget the social side is very important, because at the end of the day, when you're implementing tough structural reforms and privatizations that'll mean people will be unemployed, etc., things like retraining and social safety nets are very important, because if you cannot demonstrate to the public at large the value of opening up, of structural reform, then you run into problems sooner rather than later. Lastly, we have Governor Yu of Chola Province, the Chief Economic Advisor of the President-elect of Korea, who is already taking a very active role in Korea. As I mentioned earlier in his introduction, he was involved in the debt negotiations, so he and I spent some time together. And I'd like to ask him to talk a little bit about the program of the new President-elect and any other thoughts he might have on Asia in general. Governor Yu.
Thank you, Mr. Rhodes. I sometimes wonder if I made a good career move, switching from a professor to a politician. A professor can talk about things without being responsible, but I have discovered as a politician, particularly with the government. We are not in the government yet, but we are deeply involved. Every word you utter can be very carefully scrutinized, and I think Mr. Rhodes can testify to my lack of sophistication in that in this aspect. I'm very glad to be able to share this panel with Mr. Rhodes, with whom we had that exchange negotiation, and I'm particularly pleased that the negotiation was successfully concluded Wednesday night. We, in fact, made an agreement to come to an agreement before we meet here. And I'd like to thank Mr. Rhodes. Already the Korean market, both foreign exchange market and the stock market, are showing positive reaction to this agreement. But as Mr. Fei said, by the way, speaking at the end of the session, makes me sound like presenting a quiltwork of ideas that have been already presented. But that may be also a benefit. I can pick up ideas from others. So as Mr. Fei indicated, that exchange is not really a resolution of the problem. It has given us time to regroup ourselves, implement reforms so that we can revitalize our economy and, so to speak, earn some dollars and repay the debts. And that's what we need to do. If I may describe the problem and the approach we will be taking in our reform, in one word, is accountability. In the past, because of undemocratic practices, there was no accountability in the government, no accountability in the business, and also in the financial sector. No matter how terribly government performed, time after time, the ruling party automatically won the election. And that was the assumption this time around. But fortunately, at the end of last year, the Korean people finally realized that something had to be changed, and there was a change of government from the ruling to an opposition party. So now government is going to be held accountable for its policies. And we are going to also hold the management of the business sector and the financial sector accountable for their management practices. In order to hold them accountable, we need to strengthen the rights of the shareholders, particularly small shareholders. In the past, government has either used laws or sometimes used its political muscle to emasculate the rights of the small shareholders. And several leaders were given unlimited power to make irresponsible business decisions, and they never were held accountable. In order to hold them accountable, we are going to strengthen the rights of shareholders, and also we are going to make sure that their business decisions are made in a transparent manner. We will be legislating the requirements of transparency. All this requires, as some panelists have suggested, a political will. And you can bet on the political will of our President-elect Kim Dae-jung, who has steadfastly fought for democracy even under the threat of death. And he has shown already his determination to go through with a tough reform policies. As you know, he has not even assumed the presidency yet, but he has taken very decisive steps to rescue the economy from the precipice of national bankruptcy. And also I'm glad to tell you that he is enjoying an enormous popularity, even though he was elected by only 40.8% with less than 2 percentage point margin. He's now enjoying over 80% popularity. Of course, this kind of popularity doesn't last very long, so he's prepared to expand this popularity on tough reform policies. We are also right now enjoying a sort of national consensus that painful reform policies are inevitable. We have formed a tripartite committee of representatives from the labor, management, and the government, and they are coming quickly to an agreement of a burden-sharing scheme. Our best asset is our people. Korean people have risen from the ashes of the Korean War, and they have built one of the world's strongest economy. We have a temporary problem, but the Korean people are determined to overcome this problem, and with the leadership of President Kim Dae-jung and the will of the Korean people, I'm quite sure that in the years to come, we'll come out strong again. Thank you very much.
Thank you, Governor. Well, we have about 15 minutes for questions or until they throw us out, so I will use every moment to give people the opportunity in the audience to ask questions. I think there are microphones that can be passed around. Yes, there's a question over there. You can please state your name, who you represent, and if you want to direct it towards anyone in particular.
My name is Tom Friedman. I'm the Foreign Affairs columnist for the New York Times, and my question is to you. The U.S. Congress is about to debate the question of IMF funding. And that debate will take place in a highly charged political context. One of the things being discussed is what American banks could do by way of taking a haircut, a crew cut, a trim, whatever one would like to call it, that might create a political environment which would make it easier for the Congress to justify passage. I wonder if you would comment on that, and if you would tell us a little bit about how much your bank has also taken a hit or not taken a hit, and how much it will benefit from the Korean package you've just laid out.
Well, I think to start off with, this is supposed to be a panel on the Asian crisis, not specifically the points you made, but I would just say very briefly that I think the banking community, by agreeing to this package with Korea, is intent on resolving its own problems. And I should just state that the next phase, once this package is widely sold to the banking community internationally, because what we reached was an agreement with some 13 of the largest creditors of the country Wednesday night, the government of Korea plans to go back to the international capital markets to raise additional money. So I think you could say, in the case of Korea, we're all trying to work out the problems directly, and I think that's in effect what we are doing. And I think you will see other similar situations occur in other countries going forward. Can we have any other questions? Yes.
This is a question for Stan Roth. Stan, I think we all agree that in America that we do care a lot about Asia, but the fact is we were awfully late.
David, just want to mention who you are.
Sorry, David Hale, the Zurich Group in Chicago. We were awfully late to get involved, though, last summer, in particular in the Thai rescue. When the IMF program was designed, we had money from China, from Australia, from other countries in the region, but there was no American involvement. Was it just the Exchange Stabilization Fund restraints imposed by the Congress, or was there just a big perception gap between the magnitude of the crisis and what our own officials saw in Washington?
I could try to wiggle out of the question by pointing out that I was not yet confirmed at that point and was still a private citizen and therefore can't tell you what happened, but let me attempt to give you a straightforward answer. One, I think it's simply not accurate to say that the American government wasn't involved. The fact of the matter, and I believe my Thai colleague on the panel will confirm it, is that the package that was put together would not have happened without the U.S. involvement. It wouldn't have been anywhere near that size had it not been for the very active role that Treasury played, particularly with the Europeans, to get them to support the package. So the fact that we didn't contribute money straight up should not be confused with the fact that there was no American involvement. That's simply inaccurate. Second, I think that we can debate till the cows come home whether or not we should have had a contribution to that package, but I don't think anyone would disagree that in terms of results, it wouldn't have made a bit of a difference. That the real problem with the package at the time it was announced was that the government was not committed to the reforms, that the government was tied up in knots, and in fact, that's why the package didn't stick in terms of results. And in fact, has been the coming to power of a new government with a terrific team adhering to the IMF reforms that is now reversing the situation in Thailand. So I don't think we should get ourselves drawn into a debate as if the United States had made a second line of defense commitment that it would have dramatically changed the course of events in Thailand.
Yes. In front row.
Haruo Shimada, Keio University from Japan. I would like to congratulate the effort of my good friend Eisuke Sakakibara on coming over a long way at the very difficult time of Ministry of Finance and promised us that Japanese government seems to have a will to change the major policy from one of austerity to a more demand-stimulating one, and also pointed out that both Japanese economy and Asian economies hit the bottom. Now, Sakakibara emphasized the need of confidence to restore from this crisis, and I fully agree with that. And 2 points I'd like to raise. One is to really restore confidence in the international community. I think I really would like to see that Prime Minister or the major political leaders of Japan will say as clearly as President Kim that they shift the macroeconomic policy as vocal as at least as Sakakibara. And then I would like to see that the confidence of the Japanese public, I think Japanese public has not been really well informed about what's going on in the Japanese financial situation. Government, I can name like 6 or 7 problems, but just to mention only the size of the bad performing loans, non-performing loans, so that the Japanese people were upset by seeing the bankruptcy of some of the major financial institutions. I think it's very important to let people know exactly what was going on, how serious it is. Don't hesitate to tell the people the truth. This is the, in a sense, is the trust of the people. And without you trust the people, particularly the bureaucracy, I don't think it's difficult, easy to come over the problem. Mr. Yu pointed out the point that the asset is the people, and people, I think, really is the asset. Well, if Eisuke would like to comment, I'll be glad, but the time is limited. Perhaps it's not necessary. Thank you very much.
Suke, do you want to answer that?
Well, I think Prime Minister has been very clear on his statement that he would do whatever is necessary. But as a Japanese well-versed with the Japanese politics, Professor Shimada does understand the political constraints he is under when he is submitting the budget to the Diet. But I think, Prime Minister Hashimoto is determined not to become a Japanese Hubert Huber.
Thank you, Suke. There's a question back there. Yes.
Yes, I'd like to address this to the APEC members in the panel. If we could go back to November 1997, the APEC meeting in Vancouver has been sort of described as a non-event, particularly because when it came to any assertive leadership on the part of the United States, there was none in relation to the financial crisis. So my question is, do you feel that APEC has been obsoleted?
You want to start off, yes. Dr. Supachai?
Yes, I think you're right, Bobby. At the Vancouver meeting, it was because of this, the urging of some of us members from Asia that the APEC ministerial meetings began to discuss the ongoing crisis. Secondly, when we asked for more serious tackling of the issues, for example, the expediting the meetings of the finance ministers of APEC, instead of having them meet sometime around middle of the year, to stage it sometime now or in February or March. There was no consensus to expedite such a meeting. But in the redemption of what happened at the Vancouver meeting, I think the APEC Business Advisory Council, the ABAC, they are now trying to move on their own with their own private sector's initiative, which I think is a good one. I cannot disclose the things that they've told me what they'll be planning to do, but on their own they might try to raise some funds in addition to the funds that we are getting from International Monetary Fund to be able to refinance some of the private sector's borrowings. So I think this is very much in the embryonic stage, but at least one initiative coming from the side of a council belonging to APEC.
Yes. John Fahey.
Just to back up Dr. Supachai in terms of the relevance of APEC, yes, why didn't they meet sooner? What did they really achieve at the end of November? They ratified what the finance ministers decided in Manila, I think on the 18th and 19th of November. And I believe that was very significant as to where we've now seen the rescue package of the IMF, because the Manila finance minister's central bank deputy meeting involved something like 12 countries, including the US, in November. One thing that they did raise there, which was a first, and that was the question of whether there should be some regional financing facility. That hasn't been progressed at this stage, but to confirm what Dr. Supachai has said, not just the IMF package, but the individual basis, which is there in the background as well, a second tranche of support in individual areas to deal with the flexibility that is there. And most importantly, that it's not a question of finance and central bank deputies meeting every 6 months, but meeting as and when needed, and we're expecting another one to be announced very, very soon from November through to somewhere about the beginning of the year, and I believe it will happen sometime in February. I think that's the best monitoring process for APEC, and the reform package generally, if implemented, I believe will bring a much more viable Asian economy if we can see that occur through trade liberalisation, privatisation, opening up, in bringing in outside banking, etc. All of those barriers that we've seen there, if they're broken down sooner, using the crisis as the base to do so, I think it will lead to a much stronger Asia. APEC is the relevant and focal point for it.
Stan Roth.
I think, Bobby, it's a bit of a cheap shot to call it a non-event. That I think, in fact, if you look at what happened, a great deal happened. One, this could have been the meeting at which APEC unraveled. It could have been the meeting at which the commitment to trade and investment disappeared and went backwards as countries reacted in a protectionist fashion or self-absorbed fashion. And having the leaders meet and reaffirm the agreements that they did was, under difficult circumstances, I think was quite an accomplishment. Second, I think that there was a great deal that was done in the context of many of the meetings that took place. I see a lot of correlation between the Clinton-Hashimoto meeting and subsequent Japanese actions a few weeks later. I don't think that was a non-event. The only way you can define it as a non-event, I think, is if you come to start with the conclusion that the purpose of the meeting should have been to announce a regional rescue fund, and that anything short of an Asia fund was a failure. But obviously, the finance ministers and the leaders rejected that idea and came up with the support for the Manila process, which I think is a better long-term fix.
Thank you. There's a gentleman back there. Yes.
Sugi Liang from Korea. I have a question to Assistant Secretary Mr. Roth. I very much appreciated your views concerning this East Asian financial crisis, but I'm somewhat concerned about the U.S. Congress. How do you assess the likely outcome as well as its impact on the IMF program toward East Asia of the debate that is going to take place in Congress pretty soon?
Well, the last time I attended one of these sessions, I went around predicting that fast track was going to pass. So my track record isn't exactly terrific on this. And particularly since we'll have a vote before we leave, there may be a real answer. But I think the only thing I can say at this point is it is a major debate. I think that there is a huge education job in front of the administration, that there is a strange coalescing of issues. you now have unrelated issues sort of packaged into an anti-internationalist sentiment. So you have, UN arrearages somehow combined with IMF funding, somehow combined with fast track, and all of this being opposed from the point of view of these are bad things for the United States to be sucked into, we should stick at home. That combines this stuff on the right with the stuff on the left, right? That you need all kinds of conditionality on the IMF in terms of the environment, in terms of labor rights, in order to justify the expenditures. So you have both left and right coalitions against it, all that balanced by the growing number of people who recognize that there is a staggering need for these funds and that it directly affects American interests. So it's going to be a hell of a debate.
Ken Curtis.
Stan, I just wanted to ask Stan if at the same time when Fast Track was pulled last fall, we were told by so many people in the administration that it was just a postponement and that it would be back on the agenda for the new session of Congress, and then the White House would do what was necessary to get it through. Is the White House committed? Is the administration committed to putting it back on the agenda and forcing it through? And the other issue, I think, that I'd like to just put back on the table, we've just heard an extraordinary statement. Japan is deciding because of its own budget cycle that it's going to wait until next April or May before it starts to loosen up, maybe, domestic demand. And yet this is the biggest economy in the region, and if we wait 6 months, the U.S. is going to be looking at a $250 billion trade deficit. The trade positions, the current account positions of Latin America are melting as we speak. And so the political difficulties of getting anything through 6 months, 9 months from now are going to be so much greater than doing something now. I just wonder why Japan can't take a much more responsible, proactive, forward position.
Okay, well, I think it's only fair that we allow Suki Sakiobara to answer that point.
No, there's a misunderstanding, Dr. Karatz, on the Japanese position. As I have said, that through the enactment of supplementary budget for 97, we are going to infuse 1% of GDP within the course of next 2 months, February and March. That's a big push. And I'm saying that we are ready to take flexible measures starting from April. So we have not waited to take bold measures to restore our confidence in the Japanese economy.
Okay, I think the organizers are making signs to me. I think we have one more question. The gentleman in the brown jacket there, I think.
Stan, what about Fast Track?
The President has stated many times that he is committed, and I think we will make the push.
Anatol Koletsky of the London Times. In a way, it's taking up the point that Ken Curtis just made. He explained quite articulately the sort of macroeconomic aspects that really the collapse of demand in Japan did have a very big bearing on the other Asian economies. And given that Japan's GDP is twice the GDP of all of Asia, including China combined, one can see why that may be. What I wanted to ask was how this is perceived from Korea and Thailand. We've heard a lot of comments about the way that there's a feeling that America should play more of a role in these international packages. But is there a public perception that Japan has not yet been pulling its weight in this respect?
Well, I would ask Governor Yu and then Dr. Supachai to answer that. And I think this is going to have to be the last one because I said the organizers are already upset with me. So.
Well, any stimulus from outside, we can always use it, but we cannot really comment on the internal political affairs of our neighboring countries. But I want to say that we will welcome it if it comes.
Dr. Supachai, thank you, Governor.
In 2 sentences, I think with regard to financial assistance, both at the government and also at the private sector level, Japanese economy has been very, very helpful. I mean, in terms of extension of additional credits, in terms of Japanese financial institutions understanding the Thai situation and lengthening their credit extension to Thai private sector. But in terms of market access, that is something that we still have to work on. We've been working on that for years, and I think this is somewhere that we would probably need more assistance from Japan because we need also to partly export our way of our difficulties. Thank you.
I second to the
I would
first
allow
part of
the last word here, I would allow to Asuki Sakabara. Okay.
Yeah, let me point out that in all of those Asian rescue packages, Japan has made the largest contribution. In the case of Korea, our contribution was twice as large as that of the United States and Europe. So that we are doing our best, to try to sort of resolve this Asian crisis, and we are doing our best to sort of pump up our demand in our domestic economy.
Okay, I would like to thank our panelists and all of you who stayed on.